Hi everyone, hope you are doing well. Welcome back to another video on my channel. Today I wanted to go into Meta and let you know what my fair value for the company is. Here we go, we're going into my valuation model straight away. I put some numbers in already, so unfortunately the automated one didn't work so great for Meta because due to the name change from Facebook to Meta, the load was a bit off, so I had to manually input everything. And so I'll be referencing the actual page here on tradingview.com for quite a lot of it, but going into it, let's just go through each of the things. So you can see the current price 159.47. that is really low compared to where it's at, so we're getting it at a real discount compared to where it was even this time last year. You're looking at a crazy difference in price, and I think it's fallen by more than it should have. So that's I'm looking at it right now and I think it's fallen by more than it should have, and I think it can bounce back at a good rate. I think it's a good price right now, but let's go into a bit more of the details. So yeah, that's the current price. Analyst 5-year estimate 7.53%. Now this is the Yahoo Finance estimate for 5 years, and the estimate on here is actually exceeding that. So you can see the earnings are going from 9.88 to 16.93 in 2025 as the earnings estimate here, and that would obviously see. You can see 16.9 is way over the 8% it's at here. It would probably be closer to, you see 16%, and that's in 2025, that's still only 15.97. So they're expecting over 16% here. Now I have a realistic growth rate calculation, which I've shown in the past, but I'll bring it up again now. If we go to realistic growth rate, you can see it here. I'll just find this. This is the growth rate calculation I've been using. You can pause this here to read this, but this is the formula I've used to calculate what a realistic potential growth rate could be, and that calculation has come out to 15.08%. So with that, I think that the analyst estimate isn't overly ambitious, and so I wouldn't be shooting and going back down to a lower growth rate prediction, because I trust that this growth rate is actually achievable. But I don't think 16% is achievable, which is on, well, I mean, it could be, but I don't want to shoot that high on my estimate. So I'll go 8%, half of the analyst estimate there, as analysts typically tend to shoot about 100% higher than what the actual growth rates turn out to be. The discount rate is 12%. There's no shorter value than that because there's no dividends. If there's dividends, typically I like to bring it down a bit, but 12% discount rate, 10% margin of safety I've used. Share dilution I have at minus 1.18%. You can see previous shares that loaded in 2,900 in 2017, and that's down to 2,700 now. So they are decreasing it slightly, and we are seeing a little bit of share buybacks, which is nice to see, because it will increase the value of the current shares. Now, revenue growth rate, I've gone for 8% here. This is only really impactful for the price to sales ratio, and personally, the price to sales ratio at this stage of a company's life cycle isn't overly important. Now you can see the analyst's estimate for revenue is going from 117.86 in 2022 to 168.28 in 2025. So in just 3 years, they're expecting 168.28. Now that would be a revenue growth of around, what is that, 13% maybe? Not far off, 12 point something, 12.5-ish. You can see it's in that region, yes, just over 12.5. So let's say 12.6. We like to use half of that growth rate, as I've reiterated many times. Growth rate predictions are usually 100% higher than what the actual growth rate turns out to be. So we'll go half of what their prediction is for this, which would bring us to 6.3. And you can see that brings the price over sales fair price to 191, which is still great compared to, which is still great value at 191 compared to the current market price, which is 159. So there's still great money, well, there's still great upside there available. And with the price to cash flow ratio, again, I've gone pretty conservative 6%, and I've used 51 million or 51 billion, sorry, operating cash flow instead of what the current cash flow is, which is, if you go to here in cash flow, you can see the current is 58.47, but that is including a 7 billion increase in change in working capital, which is not sustainable. That could easily be back to a minus number next year. As you can see, it goes, it's not like a sustainable number that increases year on year. It's very much dependent on what the company does in terms of working capital that year. So as I don't think that's sustainable, I've used the number from the funds from operations instead, which is around that 51 billion mark. So using that 51 billion, I've used this here for the cash flow, and I've gone 6% cash flow growth. That's way under everything. You can see the lowest it ever was 6% in 2020. Obviously, it probably will be less in 2022, but I think that's conservative enough to definitely be achievable. And you can see that puts us at 204 for fair value. Now for this, I've had to use my own ratio values because, as I said, the price to operating cash flow actually did load historically all the data. So as you can see, 15's on the pretty conservative side as well as a ratio value, because it was around 21, 16, 15, only ever below that 15 number in one of the 6 years. But for price over earnings and price over sales, these didn't load in properly. So here I've visited this sheet, I've looked at their price over earnings. You can see until the current one, which is 13.4, the lowest it ever was 17.3 in 2018, and other than that it was 24. So typically it's always around those mid-20s or higher. I've gone on the conservative side, low end of that 20s mark at 23, and that puts us at 180 with a 14% upside before the fair value even comes in, with a predicted 2023 value of 225, which is obviously a massive return. Now, additionally to this, there is the price over sales ratio. Here I've used 6 as my ratio. As you can see, it was never below 6 from 2015 to 2021. The lowest it ever was 6.86. Currently it's 3.68, so it's trading at a real premium in price to sales ratio as well. So there I've gone for 6, and you can see that's why the price to sales fair values right up at 191. And lastly, there's the price to operating cash flow, which I've said already, it loaded in okay, and we've used 15, which if you want to just double check here, you can see 13 in 2018, but aside from that, it was never below the 15 mark in all of those years from 2015 to 2021. So I'm pretty confident with that as a value for the ratio. So as you can see, with all that information inputted into our model, this brings the fair values for each of them to really, really nice values with a good upside just to the fair value. And then you're looking to make the growth on top of that each year as well. I think this looks like it's at a really, really bargain price right now, and I am very tempted to open up a position in Meta. Let me know how you guys feel about Meta in the comments. Do you think it's at a great price right now, and are you interested in picking some up? Or do you have reservations that you think maybe you're staying away from it until you hear some more news on certain things? I'd like to hear your guys' opinions to help me make my decision as well. But personally, I think it's in a really good position right now, and I would be interested in opening up a position. So let me know what you guys think, and I look forward to speaking to you soon. Bye.